Hi there, and welcome to the Tolworth European Fund monthly update for February 2020. Wow, what a month! Been a pretty tough one. I've been running long short money for over 15 years now, and this stands out, particularly the final week, stands out as a really challenging time. Frankly, I quite enjoy it. These are the challenges we're paid to negotiate and get through, and frankly, bring it on. Let's show what these kind of funds can do in tough environments. Easy to make money when the market's going up in a straight line, bit more of a challenge when the market's falling off a cliff. Now, credit to Fred Batua and the rest of the team here at Tolworth. This has had a really good month, this fund, delivering a small positive return and really showing you why this kind of strategy can be interesting, I think, in all market conditions. So the long book to start with, I mean, you didn't really want a long book last month, but the heroes in the long book probably fell by kind of less than 3%. And there are a few of them. We had pretty good numbers at Weir. Weir is a decent business fundamentally, UK mining and oil and gas services business, cap goods, pumps, that kind of stuff. Had a bad foray into oil and gas probably maybe 6-7 years ago, which they're finally kind of moving on from. The mining business less volatile, so good numbers there, and even in a tough market they shone through. Likewise, Kinetic, which is UK defence services business, also pretty good. The European mix, John Martins, Portuguese value retailer with extensive exposure to Eastern Europe and also South America. I think progress in South America was caught investors' eyes there. So another really solid performer in what was clearly a horrible market out there. We also picked up some stock exchange, London Stock Exchange, during the month, which London Stock Exchange, it does what it says on the tin, frankly, but the acquisition of Refinitiv, those of you with longer memories will remember Refinitiv is the old Reuters trading business. Started with Carrier Pigeon, but ended up being a pretty sensible competitor to Bloomberg in the market data space. So that's now part of the LSE. We think the market's undervaluing and not really recognising the benefits that Refinitiv might bring in the long run. And actually, in a tough market, LSE and also Euronext and Deutsche Börse, which we also own long, actually outperformed, which was encouraging. So, long book, it was about having one or two things that did a bit better than a tough market and quite a lot of breadth. So as I said, it wasn't difficult to get a good short on the short book, frankly. Actually, our UK shorts in particular really led the way down, I guess, which was, kind of what we had them there to do. So we had some good financial shorts there. Travel, small net short in travel while we were long EasyJet. We were short Carnival and TUI, and travel's been a logical place to be sold off aggressively in this month with the virus kind of dominating news. But across the board, we had a number of decent stocks in all sectors. Financials were a good place. The addition of the stocks financials short was good, with some stocks 50 as well. So you'll recall we swapped out our healthcare basket for some financial short, and again that actually proved to be a pretty smart move. Better to be lucky than good on that one, but at least it worked nicely for us. So where do we sit? We protected capital really well. So what's the outlook? Obviously, news flow's been dominated by the coronavirus, and this is clearly a serious issue for the world. I think also we have to accept the coronavirus is great fodder for social media, 24-hour news channels, and kind of hysteria levels are a bit bonkers, it feels like, here in London. So I think we're trying to be mindful of that. How much of this market fall has actually just been an overextended market that needed a reason to come off 10% plus? And I think there's a fair bit of that, and that's not necessarily a bad thing. We are going to try and predict the virus's evolution. Everyone's got these different dashboards and charts and stuff. It's all great and it's all really interesting. But I didn't spend 10 years at medical school to make a prediction about this, so I'm not going to do that to you now. Let's just see how it pans out. I think our general feeling is we could be at peak noise on this, but actually, market valuations have been punctured a bit, and we know there's plenty of high valuations to go for out there across the globe, not least in growth names in the UK and Europe. So mindful of that. I think we'll gently take ourselves slightly longer during this month, try and get that gross going back up. 120, 130 would be a nice place to end, and see if we can play through this period reasonably nimbly by ending up slightly more front foot. but being careful, how quickly we do that, and being, very mindful of how nervy markets are. So yeah, challenging times, but that's what we're here for, and just keeping a focus on looking across a really broad set of stocks, trying to meet a few more companies, and working together as a team to get through these kind of tough times. Thanks for listening.